Welcome, good evening if you're in Asia. If you are in Europe, good morning. And if you're in North or South America, what are you doing awake right now? You should be sleeping. Hello, Gabriel. Rocky is here. Great. Pan is here. Of course, Pan, you get the award for probably most webinars attended. Awesome. Mock is here. Great. Thanks, Adinda. Thanks, Raymond. All right. Well, let's get started then, guys. My name is Walter Peters, and you are here at the Naked Trading webinar. What we're going to talk about, all of these webinars typically will follow either a systems approach. We're talking about a trading system or setup, which means we're going to be looking at the actual entry to the system. We might be looking at exits occasionally, or we might be looking at trading psychology or money management, which I see as two sides of the same coin. Today, we are actually going to be talking about systems. And what I'm going to be showing you here today is a way for you to find, hey, George, great to have you here. Rocky missed all the last 6 months. Are you okay, Rocky? I hope that you were traveling and spending your profits and not, in hospital or something crazy like that. Okay, cool. So what we're going to talk about today is finding those sweet spots on the chart. So if this is really particularly good, and welcome to those of you watching the recording, this is particularly good if you are new to trading or new to naked trading in particular. This is a great webinar for you. If you've been around for a while and you kind of understand the concept, which is basically waiting for the market to reach one of these sweet spots that we're going to talk about today, and then printing a high probability pattern, that's really that's all that naked trading comes down to. It's a pattern in a particular spot on the chart. That's it. There's nothing more than that. So what I'd like for you guys to do is please post the market that you would like us to look at. So let's try and keep it to currencies. Okay, so I know someone might want to see platinum or whatever, oil or something. Let's just keep it to currencies. Pound CAD, Raymond, first one through the door. Great. All right, pound CAD it is. So Raymond, what we can use some of the other ones like Boltayev and Abdul and Viswanov. Got a couple of good ones there, but pound CAD was the first one through the door. That was Raymond. So let's take a look. And of course, I knew Rocky was going to say crude. Okay, so pound CAD is going to be under miners. All right. I'm going to pull up the weekly pound CAD chart, and I'm going to make it blue and red candles because I'm kind of used to the blue and red candle thing. All right, so this is how it works. And I found this process to be very easy to follow. Now, remember, I'm not only going to show you how to draw the zones, I'm also going to give you some tips when watching the market hit those zones. So if you are not new to naked trading and you've drawn zones and you feel fairly comfortable with those, we're still going to give you some good stuff, okay? And at the end of the webinar, I'm happy to take a look at the charts from a naked perspective, and I'll show you the charts that I'm keeping a close eye on and the trades that I'm in. I'll show you those at the end of the session. What I'm doing right now is I'm simply drawing these lines, these dashed lines that remind me that the market can go through these areas, but I'm drawing them where the market has touched them from below and above, ideally. So here's one from below, which is resistance, and here's one from above where it broke through and touched it on the way up, which is support. And by the way, that is a very, very common thing for the market to do when it breaks through a level to come back and touch it to confirm. That's very, very common. We're going to draw some more over, we're going to draw some more over here. I missed that one, didn't I? It's right down there. And there's probably, now this is kind of a tricky chart simply because we've got this really strong uptrend here from 2013 all the way through the beginning or middle of 2014. So this is a really tricky one. Now, why did I draw one here? I'll tell you why. We've got a touch right here, one there. We've got two there, double bottom. We've got one there, there, and there. Might I have drawn it somewhere else? Perhaps. But for me, I try and get as many of these touches as possible. All right, and there's going to be one more right there. Okay. Now, there's also going to be one over here in this area, which is definitely right there. And there's going to be one, well, that's going to have to do for now. Now, what I'll do now is I'll break it down and go to the daily chart, okay? The reason I go to the daily chart is just to make sure that I didn't miss any. Like, for example, it looks like there's a pretty sweet one right here where the market bounced there. It double bottom there, touch there, and touch there. That's a pretty sweet spot. So I'm going to go ahead and draw that one in. And those are the ones that I'm looking for. I'm looking for the obvious misses. Here's another one. Right here, it looks like support, support, support. Resistance, support, resistance, resistance. Probably going to be another one in this area. Resistance, support, support, resistance, resistance. Now, you might be looking at this one right here, and you might be saying, Walter, why did you draw it there? It's actually not on that level, right? Talking about this one right here. Walter, why did you do that? That's silly. The reason why I did that was because most likely, now I could be wrong here, and could be proven wrong in this case, but I think it's probably going to hit it with the wick, and it did. See how the market actually did double, the two wicks went and hit that zone? So even though the closing price didn't hit it, which is basically what this line is, it's a 1 period moving average on the close. It's still, you can still kind of see what's going on because occasionally you'll see them where it's really close and you know what? I bet you the wicks hit there. And it did. All right, so that's pretty much it. Now, what I want you to know, now that I could probably draw another one here, it looks like. The way that you know that you've missed them is there's some big gaps, like there's resistance and support. But this overall is pretty good. There's another big gap here. Looks like I've got one there. And possibly, could draw one somewhere in this area as well. Probably touch that and that. Let's see on the wicks. Yep, there they are. In fact, we got one over here too. So that's kind of how I would do it. Now, what I'm going to do is I'm going to wait for the market to approach one of these levels. And the market is either going to print a pattern. Well, okay, there's three things that are going to happen. One, the market gives me nothing. So if the market goes to a support and resistance level and it gives me nothing, then guess what? I get nothing. And there's nothing I can do about it. And that's actually what happens most of the time. That's why I'm not trading every single pair on Earth. I'm mostly waiting for 2 and 3 to happen. Number 2 is that the market prints a breakout pattern. In other words, the market goes to a support or a resistance area and acts like it's going to go beyond that area. It's a very important thing because I think as traders, a lot of us, the majority of us are looking for the reversals, and we get stuck in this idea of when the market goes to a support or resistance, turn around there. That is not necessarily the case. I'm going to give you some hints for number 2 in a moment, but for right now, I just want to give you, get all this stuff out there. So, of course, number 3 is what? What would number 3 be? Right. So it's a reversal, right? And that also would count for, to me, that would also count as a retest. So the market's either going to go to a zone and reverse, like it did right here, okay? See where the market came up here and it reversed right there at the zone and fell at 1.95. Hit the pound CAD hit 1.95 here and it fell. The other thing the market might do is it might go to a zone like it did over here, where this gray box is. It might keep hitting it and then break out, which is number 2. And the last thing the market could do is it could just sit on a zone and give us nothing. Just go to a zone and not really give us a particular pattern or clue as to what might happen in the future. And that actually happens a whole lot. But there you go. So that's basically it. Now, a pullback is kind of a mini reversal. A fake out is a fake breakout, so it's actually a reversal. You know, there's lots of, subcategories of these 3 things, but basically the market's going to go to a zone and basically not show its hand, and then occasionally it will show that it's going to break out, and occasionally it will also show that it's going to reverse. Are there any questions about that? Does that make sense? Great question from George. Why do you wait for a pattern? Why not just put price with the tight stop and little risk? Well, we can get into that, George. Some traders like to do that, and if that's something that you like to do, then what you might be the kind of trader that is okay with, and I actually just consulted with a trader recently who trades like this, who's okay with having the market stop him out a lot. He has a really low win rate system that he trades quite profitably. So as you might have guessed, he has a high reward to risk ratio, and he's actually looking to improve that. And in other words, reduce his win rate even further by improving his exit. But and we talked about that. But one of the things, he's a great trader too. I really enjoy talking to him. But you might be that kind of trader. So, for example, on the far right hand of this chart, you'll notice that the pound CAD broke through the 1.5658 zone. And I do call it a zone because it's not, I don't like to say level or price point or, it's more of an area, right? So it's like, it's like the demilitarized zone. It's sort of no man's land. It's this area. It's kind of squishy, like a beer belly, I like to say. If you read the book I wrote, Naked Forex, you probably remember how I talked about it being like a bit of a beer belly. And sometimes people just barely brush a hairy beer belly and pull their hand away really quickly. And other times people might actually belly, not really be concerned, and then finally, they pull it away. And they may push their hand in quite a ways. So, these sorts of touches are all kind of different. Like, for example, this one right here is what we would call a kangaroo tail, right? This is a pattern in and of itself. It does rely on the previous candle and the next candle to qualify it, but this is a bullish kangaroo tail. And see, notice how the head of the kangaroo tail is on one side of the zone and the tail is on the other. That's really good when we see that, right? And we expect, especially if it triggers and goes higher than the high on the next candle, we expect it to go up to the next zone. In this case, it did. It did. And then there are other touches, like this one right here, where it literally doesn't touch the line that I've drawn on here, but it kind of confirms that the market did break through this level. It just pulled back to the zone, and then it kept going higher. Now, your question, George, is a good one, which is why not just take little risk? So what we could do is we could go, okay, I'm going to put my stop loss right down here, okay, right there, right? And I'm going to buy here because the market's broken through this level rather strongly. And I'm going to buy right here, and I'm going to go for profit up here. Okay, that's what I'm going to do. Boom, right there, right? All the way up there at, we'll call it 1.5830 to be safe. 14 pips lower than where I've drawn the zone, just to be safe in case it just brushes the beer belly. So what happens here, as you see, is I get stopped out. This is quite common, and it's one of those things that where, because this wasn't a bullish pattern here, this was just a pullback. Without the confirmed down, because I don't really at pieces. You can trade the patterns in the middle of nowhere, but I know from testing in Forex Tester that that's largely a losing strategy and won't make money over the long haul, or at least it hasn't in the past. So I don't expect it to in the future. And you can do the opposite, so you can just take patterns willy-nilly wherever you want. And the other thing you can do is you can just trade support and resistance, like as you say, with a tight stop. And you can probably be quite profitable at that as well. But what you'll find, I believe, is that you get a lot of these kinds of things where you get stopped out. And so then maybe, let's say you take it again. You go, okay, well, I'll take this one again. You know, it went a little bit further than I expected. I'll put my stop loss down here. I'll just buy right here. See what happens next. Is it going to turn around? And the answer is, of course, we get stopped out again. Now, I didn't cherry pick this this example. I just scrolled randomly to the end of the chart. So feel free to test this for yourself. And it could be quite profitable, but you know, most traders don't have the psychological fortitude to stick with it over the long haul. That's been my experience. Maybe I've just been given a bunch of funny traders, but the traders that I've tested, when we run them through the test to see what kind of trader they are, I largely find out that they are not looking for low win rate systems. They're looking for high win rate systems. And most of them are looking for reversals, not trend trading. We've all been taught in the books, of course, that we should be trend traders, but most of us are not. That's also another thing that I've noticed. Okay, so let's keep going here. Rocky says the pattern gives validation over time spent at the level. Right, area where price pauses, small candles, maybe a pattern on a lower time frame. Yeah. I think more of the two lows on the chart with dojis and high wave candles. Trade right the second low. Right, I think you're talking about the double bottom down here, maybe? Yeah. Yeah, okay, cool. Gotcha. I actually use Forex Tester quite a lot, but my computer pooped out on me, Maverick, and and so what happens when that happens, you have to get a new code because your Forex Tester is locked to your machine. And so I've requested that, and I actually haven't used it on my new machine, but typically I do it a lot. I do more trading in Forex Tester than I do live, which sounds kind of funny, but just as an aside, this is what I recommend to the traders that I know, that I keep in touch with, that you do this. And this is the answer to one of the most popular questions that I get, which is, how do I get good at trading, or how do I get confident? The best thing I know to do is to do this process. Find a system that you like. Make sure that you can triple it in Forex Tester. Triple it in your demo account. You can get one from a broker where it's not going to expire, so you don't have to keep rolling it over or whatever. Triple your teeny tiny money account. So you get a test count with real live money in it. Not a demo. And you get teeny, some people be $200, but or $10,000 or whatever. But the tiny account is just money that you would blow, let's say, in Vegas, or if you went on a wild bender. That would be the kind of money that you would blow, just, you know, flush it down the toilet. And then finally, after you've done that, start trading your standard account. This, to me, this is the easiest way to build your confidence. So sort of answers your question, kind of on a tangent. I just think it's really good advice. And the people that do this, the traders that I know that do well, that end up working for a private fund or managing money on their own, or just quitting their job and trading for a living, they all kind of do this. They triple their tester, they triple their demo. So this is back testing, right? This is forward testing, number 2, demo account. This is live testing, number 3. And then this is number 4, real trading. Most people just go straight to 4, and some occasionally will go from 1 to 4, or they won't even use Forex Tester. They'll use like the MetaTrader strategy tester, and they'll get 81% modeling quality on their data, which is pretty crap, and then they'll say it works, and then they'll just go straight into 4. The problem with that is you don't actually have those trades under your belt, so you don't have trading experience because the computer is doing the testing for you. And if the computer is not doing the trading for you, I don't think the computer should be doing the testing for you. So hopefully that makes sense. Okay, cool. Maverick says wonderful advice. Okay, cool. Yeah, I'm glad that works, Maverick. Glad that works for you. All right, so just want to make sure that we don't have anyone. Oh, Abdul says March 17th is a valid candle. This one. This one? March 17th. What do you mean, like a breakout, or what do you mean, Abdul? Is it a valid entry? Oh, for Acapulco. Is that what you mean? You mean Acapulco? Yeah, right. Yeah, of course. It closed on the other side of the zone, came back. Yep. It would have been triggered on this candle right here, and it goes 2 zones. Actually, it goes even further if you didn't get stopped out at break even back here on that pullback. It goes to 1, 2, 3 zones away. So that's pretty good. Yeah. Yes. Well spotted. All right. So let's talk about the overall goals. Thanks for pointing that out, Abdul. And let's talk about the overall. What I want to do is give you a couple of hints when you're looking at your zones. This is kind of a funky pair because it's so volatile. So there's going to be 400 pips between zones, 300 pips between zones, which is okay. I just think that normally your zones would be a little bit tighter, like for example in the euro or something like that. What I'd like to do is give you some rules that you can use so when you go to draw your zones on the chart. First of all, you've seen how to a higher time frame. Okay. Step number 2 is you go down to the lower time frame that you're going to trade on, just to make sure you didn't miss any. Now, I'm not going to talk about patterns today, but what I want to do is talk about overall market behavior when it reaches a zone, and what does that tell us? Okay. Number 1, quicks, repeated touches. How do I say this? Repeated touches. Repeated touches in quick succession equals breakout. That's just a fancy way of saying if the market goes to a zone and it keeps touching that zone and it doesn't go away from that zone, it's probably going to break that zone. So again, the market goes, here's an example right here. Market fell through the zone right here at 1.7843. Fell all the way down here. I probably could draw a zone down here where it double bottomed, right? But the market came up and kind of hit this zone, and it spent 1 day, 2 days, 3 days, 4 days, 5 days sitting on the zone. Couldn't really break above it, but was sitting on it. Finally, 1, 2, 3, 4, 5, 6, 7 candles touched the zone. And on 8 candles, it clearly rocketed well above all those candles and above the zone and closed well into the other side. So what that means is this is a breakout. How did we know it was likely going to be a breakout? Well, all these candles kind of sat there. If you see the market just touch a zone and quickly move away from it, that could be a reversal. It doesn't mean it is, but notice what happened here. you got two candles that came up and kissed the zone at 1.95, and they quickly fell away. And you're going to see this on the line chart. Watch how strong the downward angle is going to be on this line chart. That's a pretty good sign that you may be witnessing a reversal, right? That's very different to what we saw over here, remember? So let's compare this. What we saw over here was this, a flat market just sitting on the zone, right? Not really going anywhere, up, down, really, really flat. You compare that to what we saw over here. This is a much stronger, as Abdul knows, this is a much stronger reversal signal, right? That's it. That is a really, really strong reversal because it's such a hard. So periods in quick succession like we have down here equals breakout. Not trade blue. When the market gets to a zone, we look for patterns, we look for the behaviors like number one. And if we see a sharp angle and a quick touch, so a quick touch and a sharp angle on the line chart equals reversal. Again, this is not a pattern. This is just a clue, right? So repeated touches in quick succession equals breakout. Quick touch and a sharp angle on the line chart equals possible reversal. Does this make sense? Or is there anything here that is kind of weird or doesn't make sense? Go ahead and type your questions in now because I want to make sure that this is really, really clear. All right, so George says it's clear. Gabriel says clear. Rocky says, Raymond says it's clear. Rocky says, does it depend on what level we are, irrespective of the trend? Does it depend on what level we are? No. It doesn't really depend on which level we're at. To me, it depends on what the market behavior is at the level. Does that make sense? So I don't say, oh, we've gone, up. Like, for example, let's just say I was watching the market here, and I say, well, we broke through the first level, we broke through the second level, and I don't know if this is what your question is, but I'm going to take it as this. Oh, we broke through the third level. It's got to reverse at the fourth level, right? It went through level 1. So I go, oh, went through level 1 right here, cha-ching. Went through level 2 right here, cha-ching. It went through level 3 even, ba-boom. So I've got to just assume that when it hits level 4, it's going to turn around. And that's not what I would do. I would not assume that because it went through 3 levels, it would turn around at 4. It actually went to the 5th level here, as you can see. So broke through 1, 2, 3, 4, and then just kissed 5 before finally turning around. Does that make sense, Rocky? So really what it is here is, that, again, the idea, do quick touches have to cross a level? Okay, that's a great question, Abdul. Let's talk about that. Okay, really, really good question. I love that question. Okay, they don't have to cross a level. The way you know it's a quick touch is because you will not see the candles actually touch that level. You won't see a lot of candles. You usually see maybe 2 or 3 that will touch the level, and then the market will go away from it quickly. The way that you know it's a quick move away is what? The line chart. So, for example, let's compare these 2 touches on the far right-hand side of the screen. This one, the market went up, it broke through and came back down. Now, and then the second one, it came back, it touched again and made a really sharp angle down. So we would say one on the far right-hand corner of the chart is a strong downward angle. It looks like it's going to fall further, and it did, right? So the way that I like to trade, like let's just talk quickly about a particular trade, which many of you are familiar with. It's called the Kangaroo Tail. This is a Kangaroo Tail candle right here, and this is a Kangaroo Tail candle right here. Okay, these two. I'm not going to get into the specifics, but what I want to show you is the reason why I would not have taken both of these. Assuming that my zone is drawn correctly and it's in a good spot, okay? And I'm going to assume that this is true. I'm not going to try and kick down the straw man here. So if I go back in time, I just want to make sure this red line captures all the touches, and it does. Yes, okay, cool. All right, so I would say, yeah, it's a good setup. It's a good zone. So what I like to see out of my Kangaroo Tails, Abdul, is I like to see the head of the Kangaroo Tail, which is the body of the candle, this red part, above on a bullish one. This is a bullish one, okay? Above the zone, and the rest of the candle, the tail should penetrate through the zone. In other words, the market went through the zone and then snapped right back up, all in one candle. That's a really solid Kangaroo Tail. This one is not, because it opened and closed below the Kangaroo Tail. This one, likewise, it went through, the market went through the zone, closed below the zone, and never closed back up above the zone. So to me, these are both poor, and I would not take them. Contrast that to this one over here. This one, I would call quite a good one. Remember, we don't know what happens on the right-hand side of the chart, so we just go by this. This one I would call quite a nice Kangaroo Tail because the head is above the zone and the tail is below. You can reverse this for a bearish one. Does that make sense? Yeah, so that's kind of the way I look at it. If I'm going to go bullish on my trade, I really want to start on the right side of the zone, okay? So if I'm bearish, it's the same thing. Candle formation starts on the right side of the zone. Hopefully that makes sense. Very, very good question. I love that question. Okay, good. All right, so hopefully that makes sense, guys. You've got a couple of things to look for. When the market goes to a zone, if it keeps banging up against it, it may break out and break through it. We actually have naked patterns that you can use just based on that idea, right? But it's not enough. It's just a clue. If the market hits it and makes a sharp angle away from the zone, it might be moving away and it might be a reversal. So that's kind of the way I see it. And if you're going to get a reversal pattern on the zone, really, ideally, what you want to do is you want to see that reversal pattern start on the correct side of the zone. In other words, on the side that you want to go. So in this case, it'd be bullish. And you want to see it close on the right side of the zone. So even though this is a one candle formation, if we had two candles, we could have one that went bearish down here, and the next one kind of engulfed it and went bullish and closed on the other side of the zone. That would be the same sort of thing as this, one candle formation. Now, I call it a one candle formation, even though the definition of the Kangaroo Tail depends on what the previous candle does and what the next candle does. But in this case, it really is the Kangaroo Tail that flagged sort of, you say, okay, yep, we got a Kangaroo Tail here. It's really that candle that sort of identifies the trade. All right, so let me talk about my trades. While you're sitting here, just go ahead and give me the, any chart that you want to see or whatever. I'm going to go over my, quickly I'll go over where I'm at. So I've got a pound yen, which is looking pretty good. I'm waiting for targets at 197 and 202. I've got a stop at 185. It says Kangaroo Tail, pseudo Kangaroo Tail. It's not quite a Kangaroo Tail. I bought it about 125 pips ago at 192.25. Okay. We've got an order on the. Oh no, we're in. Yep, we're in. Okay. So we're in on a sell. I didn't realize that had already triggered today. On the CAD Singapore, okay? That's a sell at 105, right around break even now, off about 10 pips, targeting 103 and 101. So that's just triggered, which is awesome. The Euro Aussie, I'm pretty, I bought off this bullish candle here. It went up. It pulled back last week, and this week we're kind of sitting on the support level. I just want to make sure that we don't break through it. I might manage that trade if we end up breaking through it this week. And same with the Aussie Swiss. You know, I sold here at 70.14, and it's it's up to 71. Is it 71.09? Yeah. So I'd like to see it start to roll over and start to fall here. I don't know if it will. So those two kind of in no man's land. No fun really, but that's where I'm at with those. I've got the silver trade here, which is a sell at 14.50. You can see the low here today, or sorry, this week was at 54, so I haven't hit it. That was yesterday, I believe, that I made that low. And then, so I'm still waiting on that one to trigger. And then the pound, I hit target. So I sold at 57, made 200 pips, made 320 pips on target 2, right? But bummer, because I didn't hit target 3, and now I've moved my stop loss to plus 10 pips, and I'm probably gonna get stopped out today or tomorrow. I'm reckoning. This pattern here that you see here, this is a very bullish pattern, right? So you see the strong candles up, the retracement, and then if we get a bullish candle today, let's say it just closes where it is right now, which it won't, but if it did, this would be a very bad sign for my trade, right? It would mean that I'm probably gonna get stopped out. But that's okay. I would rather basically have a break-even result at 56.90, or get the 640 pips or whatever it is down here. No, sorry, 440 pips. Sorry, 440 pips. And we don't want to add a couple hundred pips to the trade. But so to me, it's better to have either a no trade, which would be when I get stopped out of break even, or somehow some miracle intervenes and we actually hit 52.60. But just looking at the chart, I think it is going to go and stop me out at break even or plus 10 pips or whatever. Rocky says, can you check the yen 4 hour? Yeah, so I know a lot of people have been looking at this as a potential like Acapulco breakout sell trade. I don't. I've got it sitting on support and I haven't seen it broke through. It hasn't broken through for me, so I'm not really interested in taking a trade on that. I know a lot of people are, but I'm not one of them. Okay, so I am not ready to sell this sucker. I know a lot of you are, but I'm not. I've got a lot of that in the forum. A lot of people are asking about that one. 24.62. Our target's one zone away. Which trades, Abdul? So, for example, the CAD Singapore doesn't really have zones, so what we use is round numbers. And we've actually got a 161.8 Fib extension from the low here to the high up here. I drew a Fib extension. You can use a Fib extension for targets too. So 101 is right around the 161.8 extension, and 103 is just a round number, which is basically equal to my risk because my stop loss is at 107. There is an alternative stop loss at 105.85, but my stop loss is actually 200 pips away at 107. I like the wider stops. Call me crazy. The pound. Okay. Yeah, the targets are so okay, so just to clarify, so this trade on the pound was this pattern. It broke through the support level, it came back up to touch it, and we basically sold here, right? We sold here. I think I actually sold. I sold on a breach of this low of this actual candle, didn't I? Yeah. So there you go. Yeah, just email me, John. You should really email me, John. Okay, it's WP@FXJake. That's my email if you have any questions, guys, because I know we've only got a few more minutes here. No worries, John. You're in Australia, are you? No, you're not. You're not. You're joking. Sorry, I'm really sick, guys. I don't know what's going on with me. I've been sick for a while now. With my kids been getting me sick. Walter, so your method when there aren't any known zones, you use fibs to make targets. I know this is the other Abdul. There's two Abduls here. Yeah. Yes, and you bring up a good point. Abdul's in the forum. This Abdul. Yeah. So right. So what I'll do is I'll use round numbers or Fib extensions. And it's ideal if they match up together, actually. You know what I mean? Like if it's one and the same, which is basically what happened here. So what I did is I drew a fib from the low here of this low to this high up here. Okay, I drew that fib grid, and then what that gives me is an extension down here, and you can see the very first spot is actually at 10090, which is just 10 pips away from 101. So that's why. The real reason I went for 103 is because I'm risking 200 pips. I'm going for a 1-to-1 trade here, right? And then the real reason why I added another 200 pips here, going for 2-to-1, is essentially because it's a 161.8 extension, and it's a round number. So ideally, they would line up. Actually, I used the same thing back in the day. Remember when the Aussie dollar was on a tear and going up? People asked me at this exact webinar, they said, Walter, where do you think the Aussie is going to go? And I said, it looks like it's going to go to about 110. And you know what that was? That was a simple fib extension. That's what the thought was, because we didn't know. We didn't have anything on the chart to tell us that was the case. But it was, and then look, I think it peaked out. Let's see. I don't want to get the wrong thing here, but it peaked right here, right, at 110.79. So there you go. I think the way that I did it is I drew like a fib from here to here or something like that. I don't remember, but I remember people asking me, and I said, I think it's going to go up to 110. So, yeah, there you go. It's an interesting way to, I'm not really big on fibs. I just think that that's the best thing you have in that situation, I used to be Canadian, but I'm all right now. John, you're funny. What was your sell signal on the pound? It was that this candle broke through. It was like a false breakout here because we're actually thinking about going long. It couldn't stay up here and it fell through. Then I think the market came back up and touched it. And we just had a sell below 57.08, so we left it at 57. It's weird to me that it wasn't below this candle. I guess what I did is I just put it, I remember I just put it below this candle right here, this 57.08. I'll have to go back and look at the video update on that one. It seems to me that if it was in Acapulco, it would have actually been a sell below here. You know what I mean? But it wasn't. Very strange. We got stuck here for a while, actually. I think this might have been a like a divergence thing too, where you had a high here. Like if you throw up an indicator on here, you got divergence. I don't really think that that's necessary. You can kind of see it without using an indicator, but basically it was a blow off top. And the real kicker was once the market closed below the zone right there. Some people, I said, look, once it happened, I said, look, you can get in if you want. You can get in on the retrace back up to the zone. You can actually put an order in there. Remember, who was talking about that? George? Was it George? You were talking about maybe, those are the kind of things that I like to see. Like if you want to take a really tight stop, you could have gone in and taken a trade on that touch right there. You know what I mean? That would have been fun. And I do that occasionally, but it's not, what I've learned is by waiting for another candle, I usually get enough information for the market to kind of tell you, okay, this is what's going to happen. It gives you more hints. If you give the trade more time before entering or exiting, you can usually get enough information to know, okay, this is what's going on here. So I used to get in too early, and now what I've learned is just, to get more information. All right. Walter, what's your opinion on the Euro Pound Daily? This is another really popular one. I think I just posted a video on this in the forum, Abdul. Couple of things here. One is we've broken through a really critical zone on the Euro Pound. This touch right here and this touch right here define this as a really, really nice level. Now, we did get a gap opening down here. the market snapped right back up the same day and closed that. This is actually a pattern in and of itself called the belt. But it didn't trigger on the next two candles, so it was basically invalid. But it was a pretty darn good belt. It just didn't, the market never went higher, so it never would have triggered any sort of trade. So what I've been waiting for is the market to get up to 0.7060 and printing a bearish candle. People have pointed out to me that we may be looking into a possible euro-pound Acapulco trade, which is when the market breaks through a level, closes below that level, then comes back up and touches it on the next candle to confirm it. So it's like a breakout and a retouch in two candles. It's a really quick sort of pattern. If we get that little diver candle today, sorry, this week, I mean, not today, then I would say next week would be good for a sell. So my overall bias on this is to sell, whether it's the daily bearish candle that gives us that signal right up here at 70.60, or if it's the weekly Acapulco trade that actually gives us that signal next week after the market prints this little diver candle this week. If this candle were to go no higher, I would still say this is a really solid diver, and certainly last week was a really good cliff candle. This is a lovely way for the market to break out below the zone, close below the zone, close on the low, which never happens. All these candles have wicks, right? It never closed on the low. Well, it did over here, I guess. And it came really close over here as well, but typically that doesn't happen. So what we have here is a situation where this could be a lovely looking setup, a great place to get in on a essentially a breakout, and it could really go. So I like that one, Abdul. So I think the weekly is probably the safest bet, Abdul. John says, too bad it wasn't a whammy top. Exactly. Would you take a look at the Swiss 4-hour, the last two candles formed? Let's take a look. Swiss 4-hour, last two candles formed. So this one hasn't formed yet, so we're still forming it. The last two. So I'm in between zones here. So I'm in no man's land, and I wouldn't trade it. And even if I were to trade it, we have a little tiny neutral candle, and then this candle right here. I would say this doesn't tell me much at all, really. I mean, without seeing the current candle, let's just say I saw that candle and the next one, I would just say, I don't know what it's going to do. It could go lower, it could go higher. It's between the resistance and support. It's a really, really tough one. It's on a minor level of support, as you can see here, where the market got stuck here. But to me, this is it's just a no trade. Sorry, I don't really have anything good to say. And Pan says, what are your thoughts about the pound New Zealand? It's so funny. All of these, I think I just did a video for my members on all this stuff, on all these pairs. This is a potential bend trade that some of the naked traders are looking at in the forum, and they're basically saying, hey, look, it's bending down here. It's doing a really sharp bend. And I said, yep, that's true. It's got a pretty sharp bend here. However, a couple of problems. One, I don't have a zone here. And two, here. One, I don't have a zone there. And two, look how much it's already retraced today. So if you were to take this as a bend trade, what you would do is you would have a sell order below the low of yesterday's low, right? Right around there. And today we're kind of sitting inside of yesterday's candle, and we haven't traded lower yet. I think this is acting like it may come up here and maybe it'll double top. But either way, I don't really have a zone drawn here, so I'm not really interested in taking a trade here anyway. And I've looked back on the chart, and I've peeled it back, and I don't see any reason for me to call this a significant area of support and resistance historically. So I would just walk away. Abdul says that's not a good bend trade on the pound New Zealand. I agree. Oh, Pan's thinking of buying it. Well, here's what if you want to buy it, Pan, here's what I would say. Let's wait and see if we can get a close well above yesterday's high. Ideally, we would also have traded lower than yesterday's low, but that's not a deal breaker. Let's say that we get this big bullish candle after New York closes, and it closes at 2.3827. Okay, I'm in. Because what that will show on the line chart is a really sharp bounce, and I think you will easily break through this this level here, this little minor resistance level where these highs were, and you'll probably make a good run at 2.5050. So that would be, I think that would be an awesome trade. Much better looking than the bend. I agree, Abdul. Wait for the New Zealand interest rate announcement in 10 hours. That's a very good point, John. True, true, true. Yes, yes. Apparently, there's some cloudiness in the Australian one too, which is they don't know what they're gonna do. So those are great to trade. Those news events where it's just undecided, like no one knows what's gonna happen. Those are the best ones. Well, actually, the best ones are the surprise when everyone thinks something's gonna happen and it doesn't. Those are actually the best ones. But the second best ones are the ones where it's kind of uncertainty. So, all right, cool. Well. Hey guys, I really appreciate your time. Thanks so much for spending time here at the Naked Trading webinar. I hope that it was helpful. If you have any questions or anything, you can always pop me an email. I hope that you have a wonderful trading week. We hope to see you soon. Take care.